Welcome to our podcast, where we share our professional knowledge and experience for those considering commercial mortgages or loans. If you are in need of commercial mortgages or loans, contact us for a no-obligation free consultation. Let's start today's episode. Commercial Mortgages for Restaurants UK Guide. Commercial mortgages for restaurants play a significant role in the United Kingdom's thriving food and hospitality industry. With a multitude of restaurants launching in the UK every year, securing the right financial support is crucial for entrepreneurs and business owners. Understanding the ins and outs of commercial mortgages, repayment terms, and lender options can greatly affect the success of a restaurant business. Understanding commercial mortgages. When looking to finance the purchase or refinance of a restaurant property in the UK, commercial mortgages can be a viable option for you. A commercial mortgage is a type of loan secured on property that is not your residence and is used for business purposes, like a restaurant, office, or retail space. Source. As the borrower, you should be aware that commercial mortgage interest rates are usually higher than residential rates because these loans are considered higher risk. Source. However, with a well-prepared business plan and a strong financial footing, you may be able to secure favorable terms for your commercial loan. Commercial mortgages typically have terms ranging from 5 to 40 years, with loan-to-value (LTV) ratios capped at around 70% in many cases. Source. This means you will need to provide a deposit of at least 30% of the property value to secure the loan. It is essential to thoroughly research the market and seek professional advice when considering a commercial mortgage. Keep in mind that each lender has their own specific criteria for lending. Source. By evaluating a range of potential options, you can make an informed decision on which lender offers the best commercial mortgage rates and terms that suit your needs and your restaurant business. Remember that your business plan and financial projections should accurately depict the current status and future growth potential of your restaurant. A strong, well-prepared application will improve your chances of successfully securing a commercial mortgage. In summary, navigating the world of commercial mortgages for restaurants in the UK involves understanding the basics of interest rates, terms, and deposits while taking a close look at your business plan and financial position. When you do thorough research and seek professional advice, you improve your chances of securing an appropriate loan for your restaurant property venture. Funding a restaurant business. Opening a restaurant can be a challenging endeavor, but securing the right type of funding can help set your business on a path to success. When considering various financial options, it is crucial to have a well-crafted business plan in place, detailing your concept, target market, and financial projections. To begin, you should explore different financing options tailored to your specific needs. One common method is obtaining a commercial mortgage for your restaurant. These loans can be used to purchase an existing property or convert a new space into a dining establishment. They typically offer up to 75% of the property's value, with repayment terms ranging from 1 to 30 years. However, by providing additional security, you may be able to increase the borrowing up to 100%. Equity financing is another way to secure funds for your restaurant. This can come from personal savings, family, friends, or even investors. It is important to remember that offering equity means sharing a portion of your business's ownership, so you should carefully consider the benefits and risks associated with this option. Business finance options such as short-term loans, equipment leasing, or invoice financing can also help with cash flow and cover immediate expenses. These alternatives offer flexibility and can be very useful in managing the day-to-day operational costs of your restaurant. Additionally, consider applying for government grants or participating in crowdfunding campaigns to raise funds. These options can be great opportunities to garner support from your community, and in some cases, do not require repayment. Remember, a well-thought-out business plan is key to attracting potential investors or lenders. Ensure that it accurately reflects your restaurant's concept, market positioning, and financial projections. By understanding the different funding options available and determining which one best suits your needs, you will set yourself on a path to building a successful restaurant business. Interest rates and business financing. When looking into commercial mortgages for restaurants in the UK, it's important to understand the different types of interest rates and how they may impact your business financing. There are typically two main types of interest rates: fixed interest rate and variable interest rate. A fixed interest rate means that your mortgage interest rate will remain constant throughout the agreed-upon term of the loan. This allows you to better predict your monthly repayments and make more accurate budget projections. It can be particularly useful for businesses with steadier cash flows, where stability is key. On the other hand, a variable interest rate is tied to the prevailing market interest rates and can fluctuate over time. This means that your mortgage payments can vary throughout the loan term, depending on the changes in the market. If the market interest rates decrease, so do your mortgage payments, but if they increase, you may end up paying more. This type of rate can be advantageous when the market trends towards lower interest rates, but it does introduce an element of uncertainty to your business financing. When evaluating your commercial mortgage options, you'll find that different lenders may offer various interest rate structures. It's crucial that you compare these offers and consider your business's unique needs, values, and risk tolerance. Keep in mind that even if an interest rate offer seems attractive, it's important to factor in fees, charges, and any loan conditions that may apply. Considerations such as the financial stability of your restaurant, your projected cash flows, and your plans for growth will all play a role in determining the best interest rate option for your business. Additionally, the loan-to-value ratio will impact the interest rates you're offered, as it represents how much you are borrowing in comparison to the property value. Typically, commercial mortgages for restaurants may have a loan-to-value ratio of 70 to 75%. In summary, understanding the different types of interest rates available and carefully evaluating your business's specific financial situation are critical steps in securing the best commercial mortgage for your restaurant in the UK. Commercial mortgage lenders. When you're looking to finance your restaurant business in the UK, there are several reputable commercial mortgage lenders to consider. These lenders offer various options tailored to fit your unique needs. They can provide you with the necessary funds to purchase a restaurant property, expand your existing business, or invest in capital improvements. There are many commercial mortgage lenders offering fixed or variable rate mortgages with terms up to 25 years. With a loan minimum of £35,001 and no upper limit, provides new borrowers with no arrangement fees and repayment holidays. You can also benefit from no early redemption charges and dedicated relationship managers to guide you through the process. Another option is to work with specialist brokers who can help you find the best deals on commercial mortgages and business loans tailored to your needs. B&D Mortgage Broker and Advisor can provide tailored mortgage solutions for London and UK-based restaurant businesses. They are experts in various mortgage types, including buy-to-let, semi-commercial, HMO, and holiday-let mortgages. If you're seeking professional advice from commercial brokers with a wider range of mortgage options, consider contacting firms like Commercial Mortgage Broker UK. They offer an extensive range of commercial mortgages, including loans for properties with short leases, SPV Ltd company mortgages, and second charge mortgages. In conclusion, finding the right commercial mortgage lender or broker for your restaurant business in the UK is essential for success. By exploring your options and working with reputable professionals, you can secure the best financing deals to bring your restaurant vision to life. Buy-to-let mortgages explained. When considering a commercial mortgage for a restaurant, you may come across buy-to-let mortgages. These are a special type of commercial mortgage designed for property investors who plan to rent the property out to tenants. In this case, your tenants would be the restaurant operators. As a potential investor, it's essential to understand the key features of buy-to-let mortgages. First, a higher deposit is usually required, typically around 25% of the property's value. This is because buy-to-let properties are considered higher risk than residential properties. You should be prepared to have a significant amount of capital available for the initial investment. Interest rates on buy-to-let mortgages also tend to be higher than residential mortgages due to the added risk. However, these rates can still be competitive and attractive for investors looking to expand their property portfolio. Make sure you carefully review the terms and conditions of your mortgage to ensure it is suitable for your needs and long-term business goals. In the UK, commercial buy-to-let mortgages come with stricter stress tests, usually around 145%, compared to regular buy-to-let stress tests at 125%. This means that your property should generate enough rental income to cover at least 145% of your mortgage repayments before being approved for the loan. This helps lenders manage risk and protect themselves if the property fails to generate sufficient income. When selecting a property for your restaurant investment, ensure that it meets the requirements for a buy-to-let mortgage and that you're confident it will attract the desired tenant market. It may be helpful to conduct market research or consult with local property experts to find the most suitable locations and properties for your restaurant venture. Finally, keep in mind that your responsibilities as a landlord under a buy-to-let mortgage will include managing the property, maintaining its condition, and ensuring compliance with safety regulations and legislative requirements. You should familiarize yourself with these obligations and be prepared to dedicate time and resources to ensure a successful buy-to-let investment. Additional fees and charges. When considering a commercial mortgage for your restaurant in the UK, it is important to be aware of the additional fees and charges that may apply. These fees can vary across different mortgage products and lenders, so it's crucial to understand them to make an informed decision. One common fee associated with commercial mortgages is the arrangement fee. This fee is charged by the lender to cover the costs of processing and setting up the mortgage loan. Arrangement fees typically range from 0.5% to 2% of the loan amount and may be higher in some cases. In addition to the arrangement fee, some lenders may charge product fees, which are fees for specific mortgage products or services offered by the lender. These fees can vary and are usually detailed in the loan agreement. Make sure to check the terms of your mortgage product thoroughly to identify any product fees that may apply. Another fee to be aware of is the security fee, also known as a valuation fee. This fee covers the cost of a professional valuation of the property you wish to secure the mortgage on. The valuation ensures that the property is worth the amount you are looking to borrow, and the fee can vary depending on the size and complexity of the property. If you decide to repay your commercial mortgage earlier than the agreed term, you may be subject to early repayment charges. These charges are levied to compensate the lender for the potential loss of interest they would have earned during the full term of the mortgage. Make sure to review your loan agreement to understand the early repayment charges, if any, and the terms under which they are applied. By being aware of these additional fees and charges, you can better navigate the commercial mortgage landscape and make informed decisions for your restaurant business. Remember to carefully examine your loan agreement and discuss any queries or concerns with your mortgage advisor, to ensure you have a clear understanding of all costs involved in securing a commercial mortgage. Repayment terms and options. When applying for a commercial mortgage for your restaurant, it is essential to understand the repayment terms and options available. This will help you make an informed decision and choose a mortgage that best suits your business needs. First, let's talk about loan-to-value, LTV. LTV is the amount you're borrowing compared to the value of the property. In general, commercial mortgages offer LTVs of up to 75% for. This means if the property you want to purchase has a value of £1 million, you could potentially borrow up to £750,000. Keep in mind that the higher the LTV, the more risk your lender is taking, which could lead to higher interest rates. Repayment terms for commercial mortgages usually range from 3 to 25 years. While shorter terms often come with higher monthly payments, they can also save you money in the long run due to lower interest costs. On the other hand, longer-term mortgages offer lower monthly payments but result in higher total interest paid. It's important to select a term that aligns with your business strategy and budget. During the mortgage term, you may experience fluctuations in your cash flow. A repayment holiday allows you to temporarily suspend mortgage repayments for a specified period. This can provide financial relief, especially during challenging times for your restaurant. However, before requesting a repayment holiday, discuss this option with your lender as it could affect your overall repayment costs and term length. Finally, be aware of any early repayment fees associated with your mortgage. If you decide to repay the mortgage early, either by refinancing or making a lump sum payment, these fees may apply. To avoid unexpected costs, review the terms and fees related to early repayments before committing to a mortgage agreement. In summary, understanding LTV, repayment terms, repayment holidays, and early repayment fees is crucial when selecting a commercial mortgage for your restaurant. Be sure to carefully consider these factors and discuss your options with a financial advisor to make an informed decision. Property deposit and additional security. When considering a commercial mortgage for your restaurant in the UK, it is essential to understand the requirements for a property deposit and any additional security you might need. In this section, we will guide you through these aspects to help you make an informed decision. Usually, lenders require a deposit of at least 25% of the property value for a commercial mortgage. However, this percentage may vary depending on factors such as the lender, type of property, and your credit history. It is important to remember that a larger deposit can potentially help you secure a more favorable interest rate and terms for your mortgage. In some cases, the required deposit may be higher, particularly for businesses perceived as higher risk. For instance, loan-to-value (LTV) rates can be higher for existing businesses, further impacting the deposit amount. It is worth researching various lenders and their specific offerings to determine which option is most suited to your restaurant. Additional security is another aspect to explore when applying for a commercial mortgage. Lenders may seek more security if they feel the property's value or your financial position lacks sufficient assurance. This additional security could take the form of personal guarantees or additional property and assets that you own. Personal guarantees make you personally liable to repay the loan if your restaurant cannot meet its repayment obligations. It is crucial to carefully assess your financial capabilities and the value of your restaurant property before applying for a commercial mortgage. This will ensure better understanding of the deposit and additional security requirements, ensuring smoother negotiations with lenders. As always, seeking professional advice is recommended in navigating the complexities of commercial mortgages for your restaurant. Accessibility and eligibility. When looking into a commercial mortgage for your restaurant in the UK, it's essential to consider both accessibility and eligibility. In this section, we will discuss the key aspects related to these factors. Firstly, please bear in mind that commercial mortgages are generally available for over 18s only, as lenders require borrowers to be legally considered as adults to be able to commit to a mortgage agreement. Thus, ensure you meet this age requirement before beginning the process. It's also important to note that commercial mortgages are designed exclusively for business use. This means the funds obtained through a commercial mortgage should be used solely for the purpose of purchasing, refinancing, or improving a business property, such as a restaurant, and not for personal investments or use. Regarding eligibility criteria, each lender has its own set of requirements, but there are some common factors they will consider. Your business's financial situation, including income, expenses, and credit history, will play a significant role in determining whether you are eligible for a commercial mortgage. In many cases, you will need to provide a comprehensive business plan that outlines how the restaurant will operate and generate profits, helping the lenders assess the viability of the business and the sustainability of the mortgage repayments. Accessing commercial mortgage financing options may seem daunting, but working with a specialist mortgage broker can make the process smoother. Brokers have access to an array of restaurant financing options, and can work closely with you and various lenders to find the most suitable loan for your specific situation. Though there can be challenges and some strict criteria to meet, being well prepared and understanding your responsibilities as a borrower will make the process of securing a commercial mortgage for your restaurant more manageable. Make sure to have all relevant documentation and financial information ready, and seek expert guidance to help you navigate the process with confidence. The commercial mortgage sector in the UK. As you venture into the restaurant industry in the UK, understanding the commercial mortgage sector can be crucial to your success. In this guide, we'll provide the information you need to make an informed decision about commercial mortgages for restaurants. The commercial mortgage sector in the UK is a thriving market, offering various opportunities for business owners like you. Whether you're looking to purchase a restaurant property in England, Wales, or Scotland, a commercial mortgage can be a cost-effective way to fund your plans. Interest rates are an essential aspect to consider when applying for a commercial mortgage. In the UK, most commercial mortgages are linked to the base rate, which means the interest rate can vary based on fluctuations in the base rate. This might affect the overall cost of your mortgage, so it's essential to factor this into your financial planning. There are several lenders offering commercial mortgages for restaurants in the UK, each with its criteria and rates. You should explore different options, keeping in mind that the requirements, fees, and terms might vary. For example, some lenders may have a higher tolerance for risk and can consider businesses with less established credit histories. In contrast, others might be more stringent in their conditions. A commercial mortgage broker can be a helpful resource in navigating this landscape. As you consider the commercial mortgage options for your restaurant, it's important to consider location as well. The property market in England and Wales can differ significantly from that in Scotland. Factors such as local market conditions, property values, and local regulations can influence the lending environment in each region. It's essential to work with lenders who are familiar with the area where your restaurant will be located to mitigate any potential challenges. Above all, remember that obtaining a commercial mortgage for a restaurant in the UK requires thorough research and careful financial planning. By understanding the market, comparing lender options, and considering regional differences, you'll be well positioned to make the best decision for your restaurant business. Legalities and other considerations. When it comes to commercial mortgages for restaurants in the UK, there are several legalities and other considerations you need to keep in mind. Navigating the complex world of mortgage financing can be challenging, but by being aware of these aspects, you can ensure a smoother process. Firstly, it is essential to factor in the legal fees associated with obtaining a commercial mortgage. These fees usually cover the cost of solicitors, who are responsible for handling the legal aspects of the purchase, such as drafting contracts, dealing with any disputes that may arise, and liaising with the lender. It is crucial to obtain quotes from different solicitors to ensure you get the best deal and make sure you budget for these costs. Another key expense to consider when acquiring a commercial mortgage is the valuation fee. Lenders typically require a professional valuation of the restaurant property to ascertain its market value. This is necessary because the amount you can borrow is usually based on a percentage of the property's value. As with legal fees, it is wise to shop around for the best valuation deal and include this cost in your overall budget. Lastly, it is essential to ensure your restaurant has a registered office. A registered office is the official address where your business receives correspondence from authorities such as HMRC and Companies House. It must be a physical address within the UK, and it can be either your restaurant's actual location or a virtual office service. In summary, when looking into acquiring a commercial mortgage for a restaurant in the UK, you need to be aware of the legal fees, valuation fees, and the requirement for a registered office. By considering these factors and planning accordingly, you can secure the mortgage that best fits your needs and restaurant vision. What are the typical deposit requirements for a restaurant commercial mortgage? The deposit requirements for a restaurant commercial mortgage can vary depending on the lender and the specific circumstances. Generally, most lenders require a deposit between 25% and 50% of the property value. However, in some cases, higher or lower deposit percentages may be applicable depending on your financial status and the risk associated with the property. It is essential to research and compare lenders to find the most suitable mortgage option for your restaurant business. Which banks offer the best rates on commercial mortgages for restaurants? The best rates for commercial mortgages on restaurants can be found by comparing a variety of banks and lenders. It's important to consider factors such as mortgage terms, fees, and any additional benefits each lender may offer. Some well-known banks in the UK that provide commercial mortgages for restaurants include Barclays, Lloyds, HSBC, and NatWest. However, it is always a good idea to explore various options, including smaller banks and specialist lenders, as they may offer competitive rates tailored to your needs. How is a commercial mortgage for a restaurant assessed and calculated? When assessing a commercial mortgage application for a restaurant, lenders typically evaluate several factors, including your credit history, business experience, the property's value and location, and your overall financial situation. This helps to determine the risk associated with the loan, the mortgage amount, the applicable interest rate, and the loan term. It's essential to be well prepared with all the required documentation and a strong business plan for the restaurant when applying for a commercial mortgage. What are the various types of commercial mortgages for restaurants? There are different types of commercial mortgages available for restaurants, depending on your needs and financial situation. Some common types include fixed-rate mortgages. The interest rate remains constant throughout the term, providing predictable repayments. Variable rate mortgages, the interest rate may change over time, usually linked to a benchmark rate. Interest-only mortgages, you only pay the interest on the loan, with the principal amount due at the end of the term. Repayment mortgages, capital and interest, both the principal and interest are repaid over the mortgage term. It's crucial to choose the right type of mortgage that aligns with your financial goals and risk tolerance. How can I find a reliable commercial mortgage advisor in the UK? To find a reliable commercial mortgage advisor in the UK, you can consult professional organizations, seek recommendations from friends or colleagues. Some commercial mortgage brokers like us have expertise in the restaurant industry and can provide tailored advice and competitive mortgage rates. It's important to verify their credentials and reputation before choosing an advisor to ensure they can help you secure the best mortgage deal for your restaurant. Are there any specific criteria for obtaining a restaurant commercial mortgage? There may be specific criteria for obtaining a restaurant commercial mortgage depending on the lender and the nature of your business. Generally, these can include a healthy credit history and a good credit score, a well-prepared and feasible business plan for the restaurant, sufficient industry experience or a strong management team, a suitable deposit, typically between 25% and 50% of the property's value, the ability to provide financial records, business forecasts, and other relevant documentation. Meeting these criteria can increase your chances of successfully securing a commercial mortgage for your restaurant in the UK. For more information, you can contact us by clicking the link in the description of this video. Thank you for listening to our podcast. We look forward to coming together again in the next episode to share more information and experience with you. For now, goodbye.